Hi, everybody. It's Amy Walker here, and this is the CEO Spot. This is one of our interviews where we are bringing you industry experts to help you get the training and the skills that you need to be successful in your job as entrepreneur. Hello, everybody. Amy Walker here, and welcome to the CEO Spot. This is your interview for the day. We're going to be interviewing Anmol Singh, who is an expert trader and investor, and we're going to be teaching you how you can, as a business owner, protect yourself by getting multiple streams of revenue. So we love bringing you great content and great experts that can help you on your journey of entrepreneurship to help you be more successful. And Anmol is going to give you some great insights today. So Anmol, welcome to the show. We're so excited to have you.
Thanks for having me.
You're welcome. Okay, now I get to give your fancy introduction and let everyone know how cool you are. So Anmol he made his name as a consultant in the trading investing industry, and he launched Live Traders in 2015, which has been voted the #1 education firm for trading 3 years in a row, which is a big accomplishment. He has coached and trained over 1,000 traders and investors, some of which have now gone on to start their own hedge funds. And he's considered the leading expert in trading psychology, which is helping people to be able to deal with the psychological and the behavioral issues that arise when high stakes are on the line in trading deals. So he is an avid stock market and Forex trader, and he spends his day working with students and teaching them how to be successful in their investments. So Anmol, welcome to the show.
Thank you. Look forward to chatting with you.
Yeah. So we were chatting before we started here that one of the problems that I see with small business owners is we don't really diversify very well. We kind of put all our energy, all our intention, all our resources into building the business. But I have seen this many times that then we also have created a scenario where we can never retire. and like all the eggs are in one basket and we're kind of stuck. So I'd love to hear a little bit just about how you got started into trading and how you made that first initial move.
Sure. So one of the good things was I started like really early on. So I've been trading the stock market since I was in college. So I was in my dorm room and sitting in my dorm room and really thinking about like, what is it that I really want to do? And my original goal was actually not to be a trader. My original goal was to get a nice, financial investment banking job. So I started applying to like Goldman Sachs, Merrill Lynch, like all the big names, being really naive, like, yeah, of course they want me, right? So I was like really naive, applying.
Who wouldn't?
Yeah, only to the big places. And I ignored all the little firms because I'm like, okay, Goldman Sachs is where I'm going to be working. And then I applied, kept applying, second year into my university and just like couldn't get anywhere, and because on the third year of university is where the deadline is, where, as I was studying in London. So the way it worked was like you did 2 years of college. Third year, you had to go out, work for like a year, and then you come back to finish up your college. So third year was like the deadline, and you had to secure your job in the second year, right? And I wasn't able to get in anywhere. So I had to look at alternative ways I can get involved with the financial markets because I wasn't able to get a job. So I found a mentor, started learning a lot of mistakes, a lot of lost money in the first year of trading. But then I finally found a mentor who was already playing that game in a bigger level. So he kind of took me under his wing, really taught me the ways, what not to do, what to do. And then, from there, I've been continuing since. So I've been starting trading since I was in college, since I was 18.
Awesome. That's amazing. You are probably not the first entrepreneur who started a business because they couldn't find a job or lost a job. And you probably won't be the last either. Mm-hmm. So when a business owner is so focused and absorbed in running their business, which I think is the case for most small business owners, it's really a full-time gig. Sometimes it's challenging to look at learning a new skill because it's not like you're learning soccer or you're learning painting. You know, there's stakes at risk that if you mess up, you're going to lose some of your hard-earned money. So what do you give as advice for somebody who's wanting to get started, but wondering if they really have the time and energy and know how to do it?
Right. I think time definitely people have, because everybody has the same hours, right? Jeff Bezos has the same hours as me, but yet he does way more than me, right? So time is never an issue. Everybody has the same 24 hours. You have to create time, right? If you rely on, okay, I'm going to do my work, and then maybe if I have some time left over at the end of the day, I'll work on it. It's never going to happen. You have to set the time aside. So the way that you do it is through a calendar, Calendar is like the most powerful thing ever. Because think about it. You can envision, okay, here's my ideal day where I would feel the best about myself. My ideal day is I wake up, I go to work out, I do my meditation, I do my journaling, then I handle my businesses. So you just basically write down what your ideal day is, and then you schedule everything in the calendar, and you have that very day the next day, right? So if you put it on the calendar next day, I want to work out, I want to do this, then I want to do this, I want to do that. Everything's already scheduled. And if you follow, you would have that ideal day that you would have wanted anyway. But if you don't schedule it, if you don't put it in a calendar, then it's less likely to happen. The research shows people who put things in calendar and schedule it are 82% more likely to get that accomplished than a person who does not put a calendar. So, that's
Absolutely.
the biggest way to manage your time. And that's how you create time. And you could see, okay, in my calendar, there's an empty spot of an hour where there's nothing scheduled. You know what? I've been putting off my meditation. I've been putting off creating that business plan. That goes in that empty hour, So that's how you prioritize your duties. So you're not stuck in working at that role that you're stuck at, right? You can think beyond that if you schedule it in.
Well, and it's funny because so many entrepreneurs start their business because they don't want to be a slave to the job. And then they just take that same mentality and they end up being a slave to the business, which I think is the worst way to be, because you're a terrible boss to yourself if you do it that way. You expect more than any boss has ever expected of you, and you get less rewards. So I think it's essential that we figure out how to really make this work for us. So how much time are we talking? If somebody's wanting to jump into the trading space and they're wanting to build a new revenue stream, how many hours a day do you recommend for your new students to be successful?
But in the beginning stages, as long as they can give 30 minutes to an hour a day, they can really learn it. Because in the beginning, they're not really going to be trading big money. What they're going to be doing is they're going to be learning. They're going to be honing their strategies. So let's say one of our courses is like a 19-hour video course, right? So if you do an hour a day, it's going to take you 19 days to finish our course, right? If you do it 30 minutes a day, it's going to take you twice as much, right? So learning, you can learn at your own pace, because market's going to be here tomorrow. It's going to be here next month. It's going to be here next year. So there's no rush to trying to make money right now, right? Market's going to be here next year, right? So there's no rush. So you can break it down so that if you are in your job right now and trading is something you're looking to do on the side, and you already have your prior commitments in your business and your work and your employee, I'm pretty sure you can take out 30 minutes a day, right? Maybe you're not going to make money immediately, but 30 minutes a day, and in a month's time, you're going to be up to speed of how the markets work. And then you can actually start trading. So I think people can create their own time. They put 10 minutes a day, they can still learn it. It's going to take them a little longer, So time is always there. Time is an excuse people make, including me sometimes. When I want to work out, maybe I'm lazy. I'm like, oh, it's, too tired,
Right.
So people make excuses, but time is always there.
It is. And I really think that I just made a video on this recently. Time is our biggest asset, and we have to look at it and treat it as our friend instead of constantly misusing it. Okay. So let's talk about first steps. If I'm a new trader and I'm just getting started, what are the first things that I need to learn?
So the first things you would need to learn is actually a lot about yourself, because in trading, let's say for any other job or any other business, right? In your business, you're answerable to your suppliers, your vendors, your employees. In a job, you're answerable to your manager, your supervisor, your boss, right? In trading, the thing is that there's no accountability because it's you against your computer, right? So you have to discipline you. There's nobody going to tell you, hey, this is what you have to do, or you're not doing this correctly. It's you and yourself. So first thing you got to get is really disciplined with yourself, work on yourself, because trading has taught me a lot more about myself than any personal development course I can ever take. Because, when you're in a good trade, then, you see yourself getting greedy. You're in a bad trade, you see yourself getting fearful right? And then it's
Mm-hmm.
like an emotional roller coaster. So learning how to control your emotions is the very first thing that any new trader we work with do. So any new trader we bring on board, we have a call with them, and we first try and find out, is trading even for them? Because a lot of times we'll turn down clients, you know what, based on your personality, not sure if trading's for you, you know, because a lot of people have that gambling type of mindset with trading. You know, they try and like get one big trade, but there is no one big trade. There's a series of small trades that creates lasting success. The rest is just stories on CNBC, but real trading is very
Right.
different than what's portrayed out there.
Yeah, probably a little less flashy and probably, I would imagine, a little more formulaic.
Exactly. I always tell traders, good trading is very boring. If you're having fun trading, you're doing it wrong.
I love that. Good trading is boring. Okay, so that's step number one is we've got to work on the mindset. And I think that the same mindset work that they're doing on their trading is going to make them a better business owner as well. It's learning your tendencies, learning to be disciplined, learning to regulate your emotions, because just like you're talking about in good deals and bad deals, that happens in business too. You know, you have wins and you have losses, and if the losses devastate you, you will be a lot slower getting to that next business win. So I think that same skill set transfers in both places. What's their second step?
I think once you've had mastered your mindset, then you actually have to learn how the markets really work. You know, like what causes stocks to move up or down, and then how do
Mm-hmm.
they move, and then learning how to read their prior history, right? So a lot of times stocks have a level. Every time it goes to like $10, it keeps coming back down, right? Or every time it goes to like 8, it keeps bouncing. So you learn how to read those levels, and that's where the trades are made. You know, you see something is bouncing at 8 like all the time. Bank of America stock, you know, there was the longest period of time. It touched 10 and it came down. It touched $10 a share, it came down. Touched $10 a share, it keep dropping, right? So now we know, okay, 10 is kind of the limit. So every time it gets to 10, we look to get out of the stock, right? Every time it drops back to 8 where it bounces, we look to get in the stock. And then when it finally gets above 10, then you usually buy it again, because then it sets a new, you know, floor. So like the ceiling becomes a floor, right? Then the 10 becomes the
Mm-hmm.
support, and then it goes to like 20, and then it keeps coming back down to 10. So then that's, you learn how to read charts. So learning how to read charts, I think people can learn how to read charts. I can teach them like in a weekend, right? 2 days, if they really spend, you know, 3-4 hours a day with me. They can learn it in like a week, how to read charts, because that's what we make our decisions based on, is a prior history of the stock. And then we forecast statistically, okay, this has a 72% chance of doing this. So it's very statistical based trading. That's why I say trading is very boring. The good trading is, you
Uh-huh.
know, we have statistical models. This trade's going to work 72% of the time. So it's going to also lose 37% of the, 27% of the time. And people have to be okay with that. We don't win all the time. So learning how to get okay with, you will lose sometimes. You know, I lose 40% of the time. As long as I win 60% of the time, you know, things add up. So people have to learn the probability mindset, and that helps in business too. You know, you have your cost of goods sold. Maybe you're running Facebook ads on a campaign. Not all campaigns are going to work out great. Some campaigns you're
Mm-hmm.
maybe going to break even on. Some Facebook ads campaign maybe going to lose money on. But until you find the right one that is consistently doing it for you. So trading, business, they're all very similar. You know, same with the workout. You can't work out one day and, you know, get in shape. It's like you got to
I
keep doing it.
know. That's my problem. Like, I'm great at the one day workout. It's the
Yep.
everyday workout.
Yeah, I go work out every Monday and then it goes downhill.
I know. Why doesn't that work? Can't we invent a Monday workout that works? Anyway. Okay, so I love what you're talking about because it is very similar to the processes that we do with our business, where we're not going to win every time. And I think that the business owners who are trying to win every time are the ones that keep themselves small, because they never put themselves in a place where they can have a big win.
Hmm.
But it's about minimizing your risk and taking the right types of risks, so that you're not putting everything in danger. And I think that conversation of risk is one of the reasons why people don't jump into investing. They feel like the risk is so big and it's so unplanned, and that you could just lose it all. And everyone's heard a story of somebody losing it all. So what is your conversation with people who have bought the story about the risk and they're hesitant to jump in because of that?
Well, I think if somebody avoids doing a certain thing because of risk, they've already failed, you know, because the risk is how
Mm-hmm.
you grow. You know, when you take risks, that's telling your body, okay, I'm putting myself out of something that I'm not comfortable with. You're going out of your comfort zone. And then what happens? You get comfortable with it. Now that's no longer a risk. So risk is something that you just haven't done. And the way you get confidence is through competence. The way you get competence is through actually doing it. So when you do it, you get competent at it. When you get competent at it, you get confidence. And so that's how it works, not the other way around. I think not taking a risk is the biggest risk people can take. It's not taking a risk, because if you talk about risk, I mean, you could walk out of, on the street and you could get run over by a car. That's a risk. Does that mean you're never going to go out of the house again? Right? When babies are born, they get up, they try and walk, and then they fall. If they fall, what, don't you think they should get back up again? Right? Shouldn't they try again? There's a risk. They're going to fall again, but you have to try. That's how you grow. If you work out in a gym, you're doing weight exercise. It actually, the way muscles grow is it first tears down the issue, right? The tissue. First, your muscle tissue gets sore, it gets torn, and then it grows. But if you never tear it, if you never take the risk, you're never going to grow. So it applies in like literally everything, from workout to babies starting to walk to, literally every single thing, because not taking risk is actually the biggest risk people can take.
I just want everyone to write that down and put a star next to it and circle it and then hang it on their wall, that not taking risk is the biggest risk you can take of all. I'll tell you, I would rather fail time after time after time again than never even put myself in a position where I can succeed. Like that to me is so stifling, and it's so, I can't stand mediocrity. So I'd rather fail and fail hard in the pursuit of greatness than just deal with mediocrity forever. That would make me, doesn't even sound good. So I love that. Everyone write that one down. The biggest risk of all is not taking the risk in the first place. Right. So, this is a lot of the psychology that you were talking about, the trading of psychology, getting the mind prepared to do well with, the situation that you're putting yourself into. And again, I see so many parallels to the business world. What is your advice about failure? Because failure, I feel like you're the source of wisdom well beyond just trading. So I want to hear your advice about failure, because that's going to happen in trading. It's going to happen in business as well. How do you teach your students to process failure?
Well, the way we do it is like, rather than, actually going out and, try, like people say, oh, we should do trial and error, right? That's how you figure out. And that's good, right? Trial and error works. And, failing also works because you learn something, right? You learn what not to do next time. So that's a great way to learn and grow, is to fail, right? Trial and error. However, a better way is to speak to people who've already failed and then ask them what they did, and just don't do that. So the way I got trading fast is, rather than trying to figure it out myself, I met a mentor who's already doing what I wanted to do. So I just, spoke to him and I told him, hey, please, it took you 2 years. That's what he said. He said, it took me 2 years to start making money. So I said, okay, please tell me what you did in those 2 years and what you think I should not do. And you just don't do what he did in those 2 years, and you do what got him the success. So you learn from other people's failures way better than actually failing yourself. Right? You can get mentors through LinkedIn these days. You can get mentors by paying them, right? I think I'm a big fan of paying people. If I want to learn marketing, I'm going to hire somebody who's good at marketing, and I'm going to pay them to sit down with me and teach me. If I want to learn about real estate, I'm going to contact somebody who's good at real estate, who's done some bad deals, done some good deals, and I'll just pay them, take them out for lunch, teach me. So learning from other people's mistakes is the fastest way to success. And apart from your own internal failures, it's not a question of if you will fail or if you can fail. You will fail at some point, right? You will. It's just a fact of life. But all I can tell you is like, fail fast, right? Don't dwell on that failure and like really go down on yourself, but actually just fail fast and then take the lessons and move on and fail again, right? Take more lessons, fail again, keep failing a few times, because failing is actually part of success rather than being opposite of success.
I love that conversation around mentors, because I've invested over 6 figures in mentors, but you know what? That has generated millions of dollars in business revenue. Right. And I'm okay with failing, but I don't want to spend my time doing the same failures everyone else has done that they could have easily told me not to. Like, exactly. I'd rather invent a new failure and be like, oh, and have my mentor be like, I've never seen that happen before, and
Right.
then learn from it, than just do the same old mistakes that
Mm.
human beings have been making for hundreds of years. So I think that practice of having a mentor and having someone teach you is not to keep you from failure, but it's to help you to avoid the easy, low-hanging failure that trips everybody up. Like, let's get past those, and then let's get you into a place where you're creating innovation and you're coming up with new ways to fail and new ways to win. So I love that. Okay, so we talked about getting started. We've talked about risk. We've talked about failure. I would love to hear about, and you said it took your mentor 2 years to start making money. How long should new investors plan that it's going to take them to start making a profit?
So, I mean, I would make a distinction. Like, there's one sort of group of people which are like investors, right? So their primary goal of investors, they already have a job, they already have a way to make income, and now they just want to
Mm-hmm.
grow a nest egg. They want to grow an account, right? They want to build a
Mm-hmm.
portfolio. That's long-term investing. Long-term investing, people can learn in less than a month, because it's the very easy form of trading, because you're not really getting in and out of stocks all the time. You're not trying to time the perfect entry. You're really holding on for like a longer move. So learning investing people can learn it in 2 days. Learning
Mm-hmm.
investing is very easy. The trading is the part that takes a lot of time and effort, because trading, you're like trading every day. You're in and out of
Mm-hmm.
stocks every single day. So that requires more, speed, that requires more precision. And you also have to cut down your thinking time. Because an investor, if I'm investing in a company for the next 2, 3, 4, 5 years, I have a whole week I can take research and, build my thesis on it. But if you're day trading, market's open right now, like, you got to make the decision in a few seconds. That's what I think
Mm-hmm.
takes time to build that pattern recognition, to build that speed. It's safe to say a year is a good time for most people, even if they take the courses, because a lot of times what happens is people take the information, they take the courses, but it still takes them a while to like really act on it, to really execute
Mm-hmm.
it. And there will be people, because we are all human, they will make the mistakes that we tell them not to make. It's just human nature,
Right.
right? They want to, because until you feel the pain of like losing your own money, it doesn't really sink in, because my mentor told me a lot of things, hey, do this, don't do that. And I still did it, right? Because I was like,
Mm-hmm.
maybe I can find another way, like, I'm too
Right.
smart, maybe I can find a quicker way. So you will still make those mistakes that I tell you not to make. So it's like a cycle. You have to get it through your system. You got to get the whole, gambler mentality out of your system. And usually takes people 6 to 12 months to really get a grasp of it. And in the year mark is when they really start making money. So for a year, I tell
Mm-hmm.
people, like, don't expect to live off trading, right? Because you're going to make mistakes. You're going to do stuff that I tell you not to do, right? So it takes a year to really get disciplined and really get into the habit of trading. Because as I said earlier, in trading, you don't have a boss, so there's no consequences. Like, you have to keep your own
Mm-hmm.
self-discipline, just like an entrepreneur, right? Your boss is not
Right.
going to come and tell you, you got to do this, you got to do that. Like, you got to be the boss of yourself. And that takes time. Not many people are used to it, you know?
Well, and I think that's why more business owners should consider trading, because we've already built that. We've already got that skill set for the most part. I mean, not maybe the brand new newbies, but most established small business owners, you've already done that. You've already been working for yourself for a long time. And I think it's important to spend some time building something that makes you money without you being in the thick of it.
Right.
Otherwise you just build yourself a company that can't run without you, and you can never retire.
Mm-hmm.
There was another question I wanted to ask you with regards to, you mentioned for the first year they shouldn't plan on living off of their day trading, which makes total sense. Is there an amount that you like to recommend people invest over the first year, or an amount of money that they should be able to have access to per month in order to build up?
Sure. So, I'll break it down further. So now we talked about investors and, traders. So investors
Mm-hmm.
can really start with any amount, $1,000,
Mm-hmm.
whatever the broker allows you to open an account with, because you're looking to grow that, right? Now, even in trading, there's 2 types of traders. One is like a day trader, which is in and out every single day, like trading few seconds, few minute trades. And then there's a thing called swing trader, which is a mix between a day trader and an investor. A swing trader is somebody who might hold trades for maybe like a week. So they're not getting in and out every day, but they're holding, Apple or IBM maybe for like a week and holding it maybe for like a month. So, swing trading is the same as investing. You could start with, I would suggest really to see any sort of return, like 3 or 5,000 minimum, but you can really start with lower than that too, right? Day trading is a separate ball game. Day trading, because SEC classifies it as a profession. So just by law, you have to have minimum $25,000 to start day trading. That's just like a regular SEC law. So 25,000 if you want to day trade. If you want to swing trade, you can start. I would recommend $2,000 to $5,000. Investment, you can start with any amount you want. So that would be the best way to do it. And swing trading is something that's much easier to learn at day trading because again, you're holding it for a few weeks, few months. You have time to make your decision, right? Not day trading, which is every few minutes, milliseconds, they're moving. So swing trading, people can learn and really realistically grow their account in 3 to 6 months. Day trading is the one that takes more time and effort.
So do you recommend that people get started with swing trading and then work their way into day trading, or does it just depend on the individual?
I think it would depend on the individual, but it's not a bad approach to start swing trading. So you kind of get into the groove of actually trading, right? And then once you get good at swing trading, you can dive into day trading. But then there's a lot of people who really want to do this as an income, like they want to live off there. Then day trading is the way to do that. So swing trading, we consider more like passive income. So let's say you're already making 50, 100,000 in your job. Swing trading can probably get you another $2,000, $3,000 in a month, right? So it's supplementing your income. Day trading is something that you're trading for income. So you're looking to make your income 20, 30, 40,000 in a month. So day trading is like income based. Swing trading is more like passive income, and investing is more like growing a nest egg.
Good. I love it. That's a good classification between those three. So people kind of know where they want to get started. So if our listeners are listening, and I hope that our listeners are really paying attention to this, because I'm telling you, I have met with so many business owners in the last 2 months that are in their 50s and they're looking for an exit plan and they don't have a good exit plan. So really, we've got to figure out a way to not have all of our eggs in one basket, because our business is great. It provides for us. Most of what we do on this channel is give you information on how to grow your core business. But I do think it's important to bring in some planning for the future. And I think that investing and trading is a good component there. So if our viewers and our fans are wanting to get connected with you, what's the best place for them to go check out and learn more about you and your company?
Sure. So, if they want to connect with me personally, the best place is Instagram. So my Instagram username is @Delta90. It's all spelled out, DELTANINETY. So that's the best way they can connect with me, see what I'm up to, and, message me if they like. So that's the best way to connect with me. But if they want to learn more about trading and maybe get involved, the best thing to do is go into the website, which is livetraders.com. And on the website, they can call our office during market hours for a free consultation. So we can actually get to know if this is even something you should even try or attempt to get into. And then they can also download the free ebook and learn a little bit more about the market, so they can decide if this is something that they really want to do or not do. That would be the best way to connect with me. Apart from that, I have a book coming out, which is Prepping for Success. So that's nothing to do with trading at all. It's strictly just what I've learned coaching traders. And it's more about psychology and behavioral issues that I find. And I think that book is probably my best work ever, because I've literally spent, as you said, as you did, 6 figures in like personal development. I probably spent closer to 6, 7 figures, and I still spend like 10% of my income attending workshops, seminars. So this book is like my gathering of everything I've spent, what the 10 biggest points for anybody looking to succeed is. So they can find out more about that by going to preppingforsuccess.com.
Awesome. Well, thank you so much, Anmol, for being here with us today. We really appreciate it. And for all of you who are watching, you got to get a game plan in place so that you're going to have multiple streams of revenue coming in, you're planning for retirement, and that you don't have to work from now until the day that you die. It sounds pretty good to me. So if you have not yet, make sure that you subscribe to the channel. Also, come join us in our private Facebook group, the CEO Spot. We do extra training and conversations in there, and we'd love to see you there. And if you know somebody who you think could use a little nudge in this direction, please share the video. And thank you so much for being here with us today. We appreciate you, Anmol, and we appreciate all of you at home who are watching. Thanks, everyone.
Thank you.